Welcome to TradeTheMBI.com. This is John, the reporters for the 8th of August, and back from a quick trip, and market did nothing but what was expected during my hiatus for one day. We finally got all the Windows updates coordinated so that it wasn't messing up my machine, so that's a good thing. Was never anything wrong with the dedicated server. It was just my ability to access it because of the way Windows has to be updated. So regardless, the market doing exactly as we expected. We'd had the turnaround, and this was the beginning right here. And again, I can't stress this enough to pay attention to these splits of crossings between the orange and steel, either direction. This from the positive side, this from a weak side, and you see the effects. Brilliant as far as that. And then you look for confirmation that follows through. We were expecting that because we ended up with the orange below green, green above red, and all those things, and that has turned into the much broader long of the cyan below red, which always a long until you get special considerations with the steel orange crossover in what you would look for the beginnings of a retrace, plus beautiful shakeout turnaround. Interesting that the NQ NASDAQ would produce the beautiful daily 50%. This is something institutions love, where you have the run up and then a return to a 50% level. Now, you might think of it in the regular terms of a Fibonacci, where they would take from the various lows, the high. This wouldn't even count as it. But our adapted Fibonacci is a little bit closer to what is really used by the current stream. And this is the thing, they're always changing it up, so what you think are the basic indicators, they use those to take advantage of you rather than be helpful as far as knowing what's going on. We could see this turnaround taking place, and we're prepared for it. Of course, the yellow candle came in at that particular time as well. All in all, perfect setup. While the euro staying within this tight little range right here, stayed above that upper range, which I've always said is bullish for the S&P in general. And the reality is you have much greater growth, so there's really even no need for U.S. central governments to keep it artificially high, other than to affect trade, because a higher euro certainly limits trade going the opposite way. It makes American goods at least more attractive on a higher euro, which is not necessarily something EU wants. Treasury's still, I think, way overvalued in this particular case, though. The flight to quality as the market gets to new highs. The problem is what happens, you get the situation where the market keeps making new highs in what everyone thinks should be a softening period, and it's this counterintuitive game theory that says, hey, that rising market is going to actually later on force even more buyers into it because they're going to be behind on the yield curve. So that's going to, and I mentioned this before, it's going to play out towards we get towards the election and then end of year. Thinking from a broader perspective, I know we like to look at it much tighter than that, but it also plays out in a bigger scale of things. So it's worth knowing those things. Why I always bring this up, I know it may seem monotonous at times, but it's critical in being able to capture a broad view in order to know, what to look for from a macro sense. Really pays off when you start doing micro trading, and as far as intraday or even swing trading from a few days. So oil maintaining this moderate to elevated level, which again has its inflationary impact built in, though it has not transpired into the market because you still haven't seen the complete squeezing. We're getting close to it when you start to see that labor participation rate improving, as it has been dramatically with this current growth rate. But you can still have decent growth without inflation, as long as there's a moderation and you don't have an excessive pull on labor pricing, because that's really what drives inflation, is the labor, not necessarily the cost of goods in such a dramatic way. Oil has been pretty consistent, and we've had it much higher before. So gold not catching fire yet, and this is an interesting one because you would think that this would be an attractive anti-inflation play, but the reality is with the market conditions and a positive growing economy, there's no need to be defensive in that category, and that's what's thrown some people off in the expectation that gold would rise soon. Now, is it going to rise later on? Absolutely, but near term, not so much. Let's look at Bitcoin, because again, this is where I talked about in a rising market there's no reason to be defensive, and this is where cryptocurrencies would be defensive, and this is playing out similar to what we see in gold. In fact, let's look at the daily, because we now have enough data that we've been looking at this chart, following along from its peaks, where we get the DOC spreads. The most recent one was the setup as we were coming down off the lows. And again, I point to this situation where you don't have to actually have the crosses of steel and orange to have this similar effect, this cross of orange below, cyan there, right there, at the same time you have steel going up to the higher. That's bullish within a bearish configuration right there. And flattened out a little bit, and then the next boom, full buy signal came right there. So this is your warning. And even if you want to wait until you're above the 23%, which I don't have an objection to at all, turn around buy. And then boom, DOC spread, orange above plus 13.5 was the point. Now this becomes an interesting one too, because it's sort of like, hey, you're partway between the 100 and the 76. I kind of like these setups because you have a pretty defined area to the 100% mark. This is something you'll see intraday as well that definitely gives you power to play with it, but a beautiful short setup within that configuration, just ending with the cross of the steel above red. Doesn't mean that the downturn is over, it just means that your clear downturn has shifted to potential bounce back in at minus 24, and then you're getting to a point where you may just see a little bounce back recovery, but nonetheless, it dropped below down to 57. So those that thought Bitcoin was going to 100,000, you have to wait a little bit longer. As you can see intraday, the setup's again beautiful. When you start getting these conglomerates of moves above 13.5, always produces that effect, and you can go back and check it. It's there. This was interesting. During the day, we ended up with the move towards the highs, get the white candle, and then continue to make highs. Once we got the Azure rising, that's your warning that you're probably getting towards the peak of that, and you look for the first signs of weakness as that begins to flatten. And sure enough, that signal came in, and when the DOC spread came in, you were right at the green ABM, which is tough because I wouldn't want to be short unless it was below that at that point. Otherwise, I want to look for a move back towards the 100% and weakness to be able to short that setup, because you know that you're coming back, well, usually to the open range of that white candle. So 53 would be your downside range target on clean short signals. But like I've said, that can bounce back and forth in between. Look at how narrow that range has become. I don't have my, I have to turn that back on the dots. When I reset everything, I had to reopen it, and sometimes it takes a while for that dot bar to reappear, so I'll do that a little bit later. So when I post charts on the Skype chat, you'll be able to see where the dots appeared in that to give us the clues on positive extremes, which happened all the way through up in here. And you can always just look at the DOC. I just find it convenient to be able to see those dots. You don't even have to worry about looking at the extreme histogram if you don't want to. But played out well with all these dips below the blue line, which tend to be bullish. Dip below red line, though, even above 50% still would have been decent unless you have a clean short signal. So that reset worked out just as we would expect it. And all in all, things are doing exactly like we thought. We knew that August would be much bigger than many people expected, and it's already turning out to prove to be just that. So those that couldn't see that happening missed out. Too bad for them, not us. We're there. So as always, continue to look for me on that Skype chat and trade well. We'll talk to you later.